This MACD strategy I'm about to show you made over $300,000 in 2022 alone. In this video, I'm going to show you exactly how this strategy works, and I will also backtest it in order to see the rest of its performance metrics like win rate, profit factor, maximum drawdown, and so much more. Let's get straight to it. First things first, get on TradingView and load whatever Forex pair or trading security that you like, because this strategy will work on almost all of this. For me, I'm going to be using the GBP USD. The time frame is going to be 1 hour because this is a trend following strategy, and trends usually last longer on the 1 hour time frame than on lower time frames. Now, this strategy utilizes a grand total of, well, just 2 indicators actually. Now, if you haven't figured out already, our first indicator is called MACD, or Moving Average Convergence Divergence. To add it to our chart, we're gonna go to the Indicators tab and type in MACD and select this one right here. The MACD indicator is great at detecting changes in momentum and direction of the trend of an asset. It's made up of 4 components, namely the zero line, which represents the center of the MACD indicator, the MACD line, which usually is a 12-day exponential moving average, the signal line, usually a 26-day EMA, and then the histogram, which is usually the difference between the MACD line and the signal line. So how does this indicator work? Well, when the MACD line crosses above the signal line, that indicates the beginning of a bullish trend, and when the MACD line crosses below the signal line, that indicates the beginning of a bearish trend. That's exactly how we're gonna use this indicator to trade. We'll take a long trade whenever the MACD line crosses above the signal line, but only if it happens below the zero line, like right here. If it happens above the zero line, like here, we wouldn't take that trade. It's the exact opposite for short trades, meaning that we will only go short whenever the MACD line crosses below the signal line and it happens above the zero line, like here. If the cross happens below the zero line, like here, we wouldn't take that trade. Now, going through this indicator, you can tell that it's extremely easy to use. But just like any other indicator, this indicator has some problems with bad signals. Like here, we see that the market was in a bullish trend and the MACD indicator was still producing short signals. To fix this issue, we're gonna need a trend confirmation indicator, so that we only take trades in the direction of the predominant trend. Click on the Indicators tab, type in Simple to EMA Cloud, and select this one by Alignator. Then we're gonna change some settings. Click here, on the Inputs tab, change Slow EMA to 200 and Fast EMA to 20. On the Style tab, uncheck everything except the plot's background, and then change the plot's background color to this light red, and then click OK. When the price is trading above this EMA trend cloud, it's in an uptrend, but whenever it's trading below this EMA trend cloud, it's in a downtrend. As simple as that. Now let's piece these 2 indicators together to create our highly profitable trading strategy. We'll start with conditions for long trades. To take a long trade, we're going to look for 2 conditions. First, the price should close above the EMA trend cloud without touching the bottom of the cloud. But what if it did touch the bottom of the cloud? Like right here, we see that this candle closed above the cloud, which is really good, right? But looking at this wick, it's also touching the bottom of the cloud. Well, in that case, we wouldn't take that trade. Simple. The second condition is for the MACD line to cross above the signal line while being below the zero line. If the cross happens above the zero line, like it did right here, you simply skip that trade. All these conditions are met on this candle, so we enter a long trade. We're gonna set our stop loss below the most recent swing low, and for the take profit, we're gonna set it at 2 times the risk. We let the trade run and take profit. Now here is another example. As we can see here, the price closed above the EMA trend cloud without touching the bottom of the cloud. Finally, we see that the MACD line crossed above the signal line while being below the zero line. We enter a long trade here. Our stop loss is gonna go below the most recent swing low, and for the take profit, we're gonna set it at 2 times the risk. We let the trade run and take profit. For short trades, it's the exact opposite. So first, the price should close below the EMA trend cloud without touching the top of the cloud. Just like long trades, we will not take any short trades whenever the candle touches the top of the cloud. Like right here, we see that this candle closed below the cloud, which is fantastic. It's what we're looking for, right? But looking at this wick, it's also touching the top of the cloud. Well, in this case, we simply skip this trade. The second condition is for the MACD line to cross below the signal line while being above the zero line. If the cross happens below the zero line, like it did right here, you simply skip that setup. All our entry conditions are met on this candle, so we enter a short trade. We're gonna set our stop loss above the most recent swing high. For the take profit, we're gonna set it at 2 times the risk. We let the trade run and take profit. Here is another example. As we can see here, the price closed below the EMA trend cloud without touching the top of the cloud. Finally, we see that the MACD line crossed below the signal line while being above the zero line. We're gonna enter a short trade here, set our stop loss above the most recent swing high, and for the take profit, we're gonna set it at 2 times the risk. We let the trade run and take profit. And that's basically it for this strategy. If you have any questions, leave them in the comment section below and I'll be right there to answer. Now, I'm gonna backtest it 150 times using a risk-to-reward ratio of 1 to 2. The account size is gonna be set at $200,000. I know 200 grand is a lot of money, but let's just assume that we're trading using a funded prop firm account. What about the risk per trade? Well, we're gonna be risking 2% of our account size every time we take a trade. Let's get into it. Now, the backtesting is done and we have the results. But before we share it with you guys, if you found value in this video, take a second and hit that like button below. Because by doing that, you're basically motivating us to keep creating these free and value-packed videos for you guys. So please do that. Now, for 2022 alone, these are the numbers. A 78% win rate and the percentage profit made was 150%. With our 200K account, this equates to $301,000 made in 2022 alone. 69 trades were taken in 2022 alone, and the maximum consecutive losses were only 4. Well, enough of 2022. Here are the numbers for the entire 2-year backtest. After 150 trades, we see that the win rate of this strategy was 71%, and the gain on the account was 440%. These numbers are really good. We see that it had an amazing profit factor of 4.98, 7 consecutive wins against 5 consecutive losses, and a maximum drawdown of 5%. And as mentioned earlier, it took me 2 years to find these 150 trades. If you want to give this strategy a try, remember to do extensive backtesting and customize it to your liking to make it even better. If you have any questions about this strategy, leave them in the comment section below and I'll be right there to answer. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching and I'll see you guys next time.